Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Friday, August the 30th, 2013. We look at the Dow Jones Industrial Average again today, and this is one of the charts that I'm actually quite interested in on the long side. Whether you're bullish or bearish, I'll show you that in both cases you would still be looking for a long move. Whenever you look at this chart I showed you a couple days ago, the 6-month chart of this, you can see that there's basically a little shoulder formation here, and then we come up here, we form the head formation, and then you could come up here and bounce up again to about the 1530 or 15300, 350 level, and if you top out at that level, you'd be forming that second shoulder formation. That would be the bearish argument, but that would still show several hundred points that the upside bounce would be required in that scenario. And if you look at it from a different perspective and you say, well, I just think it's in a downtrend, well, then downtrends typically, when you come down, you close below the 50-period moving average, this red line right here. Typically what will happen is you'll sell off to a point and then you'll bounce back up, test that 50, find resistance, and then sell off from that point in like that kind of a manner. That would still give you several hundred points to the upside as well. So that would be, if you were bearish in any way, shape, or form, you'd still be looking for a bounce in this scenario. And the other scenario that you could draw out, and it's a good point to always make, is you have this high point here, and then this higher high here, this low point here, and currently a higher low here. That is still an uptrend, so you still have this scenario going on right there. In that scenario, you'd be, again, also looking for a bounce. You'd just be looking to see what happens here. You'd be looking for a test of this level. The basic thing that I want to point to your attention is that we've been looking at this sell-off here for a good bit, looking for some kind of reversal signals. We went down here. Do we see a hammer? No, we don't. We get one a couple of days later. It doesn't hold, and she goes lower. No hammer. Well, then today we get one here, and that's what I wanted to see. We could even form another series of hammers. You can do them back to back and kind of get a tweezer bottom scenario. But the basic point is that you're looking for those hammers because they indicate that there's buy pressure there, and that is what you want to find at a bottom. It's a good area to start looking for long entry opportunities, and so we had that today. I like that, and there's a couple of things that told us to start looking for it here. Kind of rehash this for you guys. You got this low point here on the ultimate oscillator. Come on down and look at the price activity at that time period. Here's your low close. Now look at this higher low right here on the ultimate oscillator. This is trending up. All right, so momentum to the downside is decreasing, and that's why you're starting to see it momentum move higher. All right, so that would make sense. So then if you have momentum decreasing to the downside, what are you doing trading lower than you did before? That's what we call a bearish divergence, and that doesn't hold. They typically reverse in the other direction, and you want to wait for that for the reversal to actually happen. So right now we're getting some signs that it's coming. We'll keep an eye on it. If Syria is attacked over the weekend, you could see this sell off some more. We come down here and test this low. If that doesn't happen, you can see some reprise in the market where people just say, oh, okay, it wasn't as bad as we thought it was going to be. A lot of today's selling was based on the fact that we're going to see a 3-day weekend. People didn't want to hold with the potential with the strike of Syria and things like that over the 3-day weekend, so there was a lot of selling ahead of that. These are all things that are just like temporary, just news-driven things that will obviously reverse and start moving higher the following Tuesday if the markets, like I said, we don't see a strike on Syria. So if on Tuesday you get a higher high than today and we start to move higher, then that's fine. That'd be a buy signal with the stop set right here, and you can be looking for that to come up here and test this 50-period moving average. At that point, I'll be looking to see, are we getting sell signals at this point? Are we starting to stall, or do we keep moving higher and test the previous high? Again, I can't tell you what's going to happen until it starts to form there, but right now I'm looking at this and we're saying we know there's a bounce regardless how you look at it, so we'll be looking to take advantage of that bounce. Whenever you look at the Dow Jones Industrial Average, it's nice to always double check it against the trend, the Dow Jones Transportation Average. In this particular chart, I'm going to show you some trend here. This is a 3-month daily chart. You can see that we are selling off. We have a high point here, a lower high here, a low point here or here, and you got a lower low here and here. So this is very bearish, but I want to point out again, you have many support lines in this area, and then at this point here, you're lower than you had been a couple days before. But look up here at this ultimate oscillator. You're now down below the 30 line. Under the 30 line is typically where you get your oversold bounce situation. So in those scenarios, in most cases, what you're going to find is the sell-off runs out of steam at that point. And so on Tuesday, because the markets are closed on Monday, on Tuesday the market could actually show a hammer candlestick formation, and then we can start to move higher and that kind of thing. So it's important to take note of that. Remember, again, a low point at the 30 line is typically where you get your bounce signal again and again and again and again. So I'd be looking for the same thing to happen here, and that's why they're really not conflicting. When you look at the the Dow, you're seeing a reversal signal. When you look at the trend, you're not seeing a reversal signal, but you know the timing for one is right. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. I'll be updating all the short-term and long-term charts tonight, and you can find those simply going to the market section of the website and then click on market charts. It's my personal charts with my personal annotations, including the stop loss limits and so forth and so on. God bless, take care, enjoy the 3-day weekend, and be safe. I'll see you all on Tuesday. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.